Welcome back, friends, to This Week in Agribusiness from the Farm Progress Show. One of the things we know about agriculture is that it is not cheap to be a farmer. Financing is crucial. So we're going to talk a little bit about financing in agriculture. We're joined by Bill York, the CEO of FarmOp Capital. Bill, you've been in the ag lending business for 40 years. Talk a little bit about how you've seen it change and where we sit today in 2021 as ag lenders.
Yeah, we've certainly seen a lot of changes in the commodity prices. I've spent, as you said, 40 years lending, most recently as the CEO of Agribank, the Farm Credit Bank in St. Paul, and a dozen years leading C&H Capital. So I've seen a lot of evolution in terms of funding, and certainly we've probably not seen anything as volatile in terms of commodity prices at this point in time. We also haven't had the risk mitigant tools that can be used by a farmer and used by a lender to help put together an operating line of credit.
And I think part of not having those tools has meant that there have been gaps that have developed in accessibility to financing, particularly for younger or beginning growers. What can be done about that, Bill?
Yeah, we put together a structured loan product to address those farmers and really looking at the segment that is the significant and growing segment. Some 8% of farmers produce 65% of the product, and the majority of those rent more land than they own. So the traditional underwrite, the traditional lending does not necessarily work very well for these individuals. The same thing as you mentioned, new and beginning farmers don't have the equity. So what our structured loan product is designed to do is to take a look at the farmer's ability to produce a crop, their marketing strategy, their crop insurance plan, and look at those risk mitigants and lend against that.
So FarmOp Capital, you're not doing the traditional balance sheet analysis that a lot of folks might be familiar with talking to their lender. You're looking at really their capacity for production.
Yeah, we'll look at their balance sheet for background and understand their balance sheet. But yeah, we're looking at the value of the crop they're producing, and that's our primary collateral. And it gives us the flexibility to pass on to them a fairly well-defined advance structure. We will advance more than other lenders will for the same type of collateral, and we extend earlier. Right now we're doing 22 loans. The objective there is to create value for the farmer, or give them the opportunity to create value so they can use that funding source to lock in inputs, make sure they're available inputs, negotiate their rents, and really put them in a position to optimize their operation.
Now, from the grower's perspective, how different is it working with FarmOp than a traditional quote-unquote ag lender?
Yeah, I mean, I've seen all types of ag lending,
right.
and we're going to look at some of the same things, but we're going to be very intimate in looking at what is their operating budget and what is their marketing budget, their marketing plan, their marketing tactics and strategy. We're going to be very focused on that. While we don't do, we're not a CTA, we don't do marketing, we're not a crop insurance agency, we don't sell crop insurance, but we do stay very attuned to their plans there, and that's what we're lending on.
Bringing some change to the industry, that's Bill York from FarmOp Capital.